Hello, Warriors. Dale Pinkert at TradeGATEHub.com. Let's have a great week. Everyone ready for a great week in the room? Declare it, which means say it out loud. Let's have a great week. Okay, I'm going to start off with Euro Pound with central bank action, BOE, ECB last week. I've been talking about accumulating Euro Pound for the last several weeks. We've been pretty range bound. I talked about the compression building up in this market, and the catalyst was central banks, Bank of England raised rates again. All the ECB had to do was talk about it being a possibility. This was and is a 2-week reversal that we had last week. The way you know you have a 2-week reversal is you just count back 2 weeks to the Friday close, and we definitely closed above it. It's going to take a lot to negate it. In my view, I think it's significant. In fact, what I'd like to see with what the dollar's doing right now, and if you are in our main chat, you're long the dollar from 41 here this morning. So I know everyone thinks that's it. The dollar is done. And, you know, the dollar is going to lose its reserve currency status next week. People talking about it losing petro currency type of support from Saudi Arabia. I don't think that's in the cards. And even if the dollar has peaked, there's going to be better entries to get short the dollar. I still think that there's a 50-50 shot for a new high. Anyway, there at least a trade from here. And I don't think I'd consider getting short the dollar until we were back up towards 96.40. Of course, you always have to know where you're wrong on the trade. And these lows would be it. To negate this breakout that we had at 4.5 is pretty important, although the 3.5 is what gave us 97.50. If you look at it, this could still be drive 1 confirmed, and we had a little divergence here, not a lot. We headed up again towards 98, that would build the case for deterioration of upside momentum and create a pretty good divergence. So be careful about counting the dollar out just yet. I still think there's one more hurrah on the dollar. I still think that, I mean, it was an ugly week, but then you look at something like US dollar yen, and I still believe compared to the dollar weekly, the yen weekly was not bad, closed near the high end of the range in the midst of a dollar getting hit pretty hard, especially against the euro, and the yen held up. And, you know, one of the reasons is we're getting pretty close to some targets I've been talking about for several months on the 10-year. I've been looking for 2%. Here we are at 192. The big number this week is going to be on Thursday, an inflation number. We are beginning to diverge, but I pointed out this little triangle here, and just the width of the triangle takes it above 2%. There are some counts up around 210, 220 if it gets extreme. Anyway, until we're back trading under 170, you have to give the upside the benefit of the doubt, although I do believe that this is going to be the final stage for a while for this decline in note and bond prices and yields heading higher. I think they will begin to pause after we get to, say, 210 in that area. But you're not early on the trade getting bearish bonds, that's for sure, right? Are you early? I mean, I don't know how many interviews I've done with people, and I've showed the bond market and, you know, that it looked terrible and we could have a breakdown, and we have broken down here on the TLT, although it's getting to levels where I might be interested at 136. And I think about what would be the possible scenario for yields to peak and some type of low come into the market. And I keep coming back to risk off could do it this time. After I'm figuring that these bonds head towards 136. That's a measurement of this triangle too. So we could have a pretty good down day, maybe not even turn till Thursday on the inflation data, but it's kind of late in the game when they were trading, you know, going into the new year, 152, and here we are at 38, to start getting bearish bonds in my view. So I think about what could create a bond rally and one more push in the dollar, and I keep coming back to it could be risk off. I know a lot of people are talking about that we're most likely just going to range trade through the month of February, and they're looking for fireworks in March, whether they're bears or bulls, you know, right around the Fed meeting. March is a big month for a lot of cycle guys. It's still my contention, and even more so in NASDAQ, which had a much weaker rally than the S&Ps, that the low that we put in 2 weeks, I mean, just keep it in mind, it's only 2 weeks ago from today that we put in this this candle from sharply lower, and remember, everyone was so relieved. You can't rule out maybe one more push, something like this, and this pullback was important. To hold Friday's lows is important in NASDAQ, even more so important in S&Ps, because look at this. And it's still my view that we're going to have another smash, maybe since people are complacent about February. I don't know why they are with what's happening everywhere with Ukraine and, you know, things heating up there. But it's still my view that we're going to get one more good low and then a great rally, I think, from here. And, you know, I could see the bulls case that we get one more shot down to 4160, and then we're off to new highs. And I could see the bears case, we bottom at 4160 and then have another failing rally. But that's later. All we have to do is take care of what's next. And to me, what's next, higher probability is taking out the low from Monday. I mean, look at the RSI reading that we had near the lows on that spike day. See, I mean, we're under 20. So 14, where was it on the daily? Under 30. Okay, so, you know, if you doubt it, it doesn't always work, but may as well get to the Aussie, because that's something that I talked about, that we would have one more new low, and that was because of this RSI reading, right? So I was looking for, you know, shorts up here and one more new low, which we got in Aussie, right? We took out the low, and now we have a divergence, just like we have in the dollar. So I still think that maybe Aussie makes a, you know, another push up, but I'm still looking for one more low. And I have targets down around 68.5. We'll see how that plays out. And I was even looking at Canada, and I know crude again, crude's reversing a little bit here, but the Canadian, when I look at it, almost looks like some type of, you know, inverted head and shoulders. And I think we start closing over 128. And I would wait for that we could get a rally towards the 131 level. So we could have one more push up to clean out the bears in USD CAD right here. And that would also correlate to one more low in Aussie, 69, 68, something like that. And again, the yen, I think the yen's going to tell us when we're close to the top in yields by completing this pattern up here. 3 drives to a top formation. It's going to come in above 117. And I think that's going to end up being a decent short, and most likely a pause in the move in yield. So, you know, everyone's on the higher yields. I know the Fed hasn't even moved yet, but the market did a lot of its work for it. So, you know, I do think there could be a pretty good pullback in yields. And that's when I think the dollar could begin to suffer after yields peak. So gold's trying to bounce. Look, I know how hard it is to, you know, when you have a long-term outlook on a market that, you know, you're always afraid, you know, is this the bottom? Was this the bottom? Am I going to miss the bottom? And, you know, it pays not to have FOMO. I look at this action and, you know, this was something we talked about live, that you could have shorted gold here with stops over the high of the move, risking 25 bucks or so. Big break, directional, impulsive. RSI didn't diverge down here. And in twice as much time, all it's doing is working off its oversold reading. Look, we're not oversold anymore. We're in the 60s. So in my view, this is still consolidating this break, and a consolidation type formation that could end up being something like a flag. Take a look here. So you have some kind of view on trend line. Here's something like that. Okay. And, you know, rising wedge on top of it, you know, some type of flat line. And the breakdown on the wedge looks like 1794. This move was from, let's call it 1855 to 1780 is 75. 75 from 95 gives you 1720. 1720 is this line that I've been looking at for a long time. One more flush in gold. And I have to think that's going to be done by risk off and another rally in the dollar. So we'll see how that plays out. And just be careful if you're in the stock market here. We could rally back to 4620, but if the S&Ps start taking out Friday's low, which was 47.30, you have to be careful, because then this little ABC continuation move would end up turning into a failing rally and the washout under the low that we had 2 weeks ago. I also wanted, before I left you, I feel it's important. I talked about this euro pound. I think you buy it anywhere and hope it pulls back. And perhaps it could pull back to this confluence of moving averages at 83.80. But this is a big deal if it's a big turn, because this could be part of the dollar bear market where euros can outperform cable. And, you know, I've already shown you the weekly, and we really do need to get above 87 to declare a bull. But every once in a while, I think it's healthy and instructive to break out your telescope and take a look at a monthly. All right. So, you know, when I look at this monthly, I see a huge move from 68 or 70 up to, okay, let's be conservative, call it, you know, 2000 pips. And what's happened since 2016 has been really nothing but consolidation. And I believe we're not even 50% back from here, from this low 94. 82 would do it. Okay. And maybe that's why a lot of people were looking for it. And this be about halfway back is where we are and where we held. And if you look at it and it's just consolidation, why can't we have this happen again when the dollar begins to fall in earnest? That the pound, and what was interesting about what happened last Thursday is, you know, you would have thought the pound would have outperformed with a rate hike, and instead of jawboning, which is all Lagarde did. So I think it's an important signal that, you know, when a market doesn't respond like it should, you should have had much more cable strength based on, you know, the interest rate differentials between that and euro. And instead, the reverse happened. So maybe the UK is going to slow down first because they're tightening first and the most aggressively. but I think this was an important week. You never know till you look back in the rearview mirror. So you still have to manage your risk. You know, I'm a believer, if you listen to me and you're buying it in the low 83s, you have some nice money made. There's nothing wrong with taking partial profits on your position, but hold a core in case it turns into something that could be a great position. And I do think we have at least 87.50 coming in here to the upside. So, and also, you know, still try and be patient in the gold and the silver, and we'll see what happens dollar wise and risk wise over the coming days. But I'm still going to be patient about waiting for this gold move to the downside and silver, and thinking that even though Aussie is rallying today, it was the weak sister last week. So maybe we just got this type of ABC. So I might be looking for sells around 71.90, 72, and in the Aussie. But the dollar is, you know, when I don't know what to do with like individual currencies, there's nothing wrong with buying the basket. And then you don't have to be a genius as to which currency is going to under or outperform to the upside. So that's all I have for right now on Monday. I guess the big theme is Euro pound looks like we have a bottom here. You want to buy any pullbacks towards 84, 83.80. Of course, you always have fail-safe stops under the spike low. You don't want it to run and be unlimited. That's at 82.80. And I also think there's still another push up in US dollar yen towards 117. The Dixie, I throw in the, here's my bull bear line right here at 94.50. Thinking even if the dollar tops, there's some type of rally that's going to occur here, and being patient in the gold buy. I'm not shorting it. I'm not long. I'm just sitting on my hands waiting for the setup. And I do say be careful with this S&P. To me, this recovery, remember this was the bull bear line that it tried to close above, and then the next day it couldn't. And the rally that we had in NASDAQ up until today was even weaker. But I think NASDAQ's going to have a very difficult time doing much better than 15.4, 15.6. And to me, this looks like an ABC if we do rally. And I still think we could see lower numbers here as well. So that's my take on the dollar, on the metals, and crude oil market. I got stopped out top picking it last week. Doesn't mean I'm not going to still look for some type of high here. Who knows? It could be today. The reason I'm not doing it today is I need divergence on shorter time frames like I had here. And I don't have that now on the 2 hour. I have a confirmed high on the 4 hour as well. Let's see what the 15-minute looks like. Yeah, it's just sideways right now. I want to see some type of spiking action where we make new highs. Today looks like an inside day. So the most bearish thing energy could do tomorrow would be to take out today's highs, then today's lows, and finish down there. And then perhaps we'd have some type of correction. You know, people were this bullish when crude was 140 several years ago. And I'm thinking that, you know, after the Olympics, one factor that could bring oil down would be China's zero tolerance to COVID. And, you know, it's spreading. We're watching the Olympics here. I know they're doing a great job, but it's spreading. They may go to a lockdown. And the other scenario could be, I think that the Biden administration would like to do a deal with Iran and try and get 1 million extra barrels on the market every day. So be careful with your longs. Only riverboat gamblers like me should try and short this market. there are higher probability trades, and I've listed them to you. And I think the theme really, in fact, I believe the theme is that what's happening in euro pound is significant, probably more significant than what the dollar itself did last week. So remember, don't just count your pips, count your blessings. Mike Venezia, Coach Mike is going to be with you in an hour and 13 minutes. So tune in for Mike. Again, we invite you guys always to come in and share your ideas, become part of our community. It's completely free at TradeGATEHub.com. Good hunting the rest of the day, and I'll be back with Mike tomorrow morning. Good hunting, everyone.